Good morning, good afternoon, good evening. What a eventful day this has been. The news has come out. We know what we're up against. So let's remove this. Let's check that calendar before we get ahead of ourselves. And let's refresh the calendar just to make sure we're not missing anything. All right, so this is what came out this morning. And looking at this data, you can see basically the US is intending on keeping the rates higher for longer, right? And so the data kind of points in that direction. It's going to force them to do so. And so with that in mind, the euro fell, right? That no, accordingly. And so when it fell, according to the news, it did not just go straight to the South Pole. It fell one, two, three, four, five, and a bit. We'll call that 6 boxes. And when it retraced one. Whoops. It retraced two. It retraced three, and we retraced 4 boxes. And again, the second time around, right? So all of this stuff to say that standard deviations, is kind of what we're trading through. Think of it as a Bollinger Band, and we're just moving the Bollinger Band to see how the market is, uh, what's the word I'm looking for? Expanding or contracting, right? You can see that here, right? So the difference between this and this is what we're trying to capture, right? Through the use of the box. Right. So is it 8 o'clock? Okay. So there it is. Most people should be here. All right. So let's get this show started. So uh, the news has come out. If we go and check the daily chart, we can see what the reaction to the news has been. Right. So when we look at today versus yesterday, we have a higher high, we have a red candle, and we're trying to push towards the lows. Compared to yesterday, this would be bearish, right? So if we go and look at that bearishness on an hourly scale, we can see why it's bearish, right? We were testing the highs and the news came out, the US CPI, Consumer Price Index came out, and it propelled the euro lower, right? And as such, we want to see where the risk is. So we highlight the floor, we highlight our ceiling, and then we try to play within those limits. And we can do that on a 5-minute chart by highlighting support and resistance, with our mind's eye. No special tools required, right? Just connect the dots. What you see as support and resistance, right? Standard definition. Nothing more, nothing less, right? Just normal levels that have been tested, that likely will be tested again. And then we expect the price to react to some of these levels. And so we call that action points. And these action points for you and I become a location where we just ask ourselves, right? Do I have something to do here? Do I want to add to my trade? Do I want to remove from my trade? Add to my winners? That kind of stuff, right? So now we've highlighted a ladder. We have a direction in mind. Because of the news, because of higher for longer, we think the euro is going down. We want to be selling resistance. And so if this is a swing high and I'm selling resistance, I want to measure from that swing high. And then any push up back into that swing high, I want to sell it. Right. So any move back up, I want to sell. And I want to sell expensive, not when it's cheap. Right. I don't want to sell the bottom of the box. And so I'm going to be a seller of resistance when it's green and probably near the top of a box, like where we are now, right? So I'm in the top of this box. As such, I would expect the price to go to the bottom of the box, And so if I see a green candle here, I will sell that green candle, right? Because I'm at the top of a box, expecting to go one standard deviation, right? So the standard deviation is our unit of measure. It comes from the 5-minute chart, right? It's this box, it yields this size. And with that size, we go about measuring the reality, right? We go about measuring the facts, and then we can see what's unfolding when we're breaking through boxes or staying in a box. You know, the difference between this and this, right? So staying in the box tells us one thing versus breaking the boxes. Right? So if we can see green here in this lower area, in this upper area of the lower box, we want to sell that. Right? So something like that. Right? If it pushes up more, we sell more. If it pushes up more, we sell more. Right? So if this is a low, if this is a low and it's not going any lower, what if I put my box there and I start measuring in this fashion? Right? What if I think this is a bottom and the market's trying to go up? Right? Because of this morning's news, if it is trying to go up, it's unlikely trying to go to the moon, right? So maybe it's just pulling back a little bit, right? And my job with the boxes is to figure out how big this pullback may be and play through it, right? Make my money through this. And because of this big momentous move, I don't want to fight this. I'm not buying, right? I'm going to be a seller, and I'll be a seller at the right positions for the right reasons. Right. So that's it. It's positioning, and not knowing the future allows you to prepare alternatives, right? What if? And these alternatives, oh, we just made a little bit of money here. Right? We just closed the trade. If we can repeat this, that would be awesome. Right? If it pushes back up, that would be great. Like that. So I'm selling when it's a green candle. And if it can get even higher, closer to this area here, I will take another trade. Like so. Right, there we are. Sell that again. This candle, today's candle right now, looks bearish. Someone's asking, why is it bearish based on the daily candle? Because we made the high first an hour or two ago, and now we're rapidly moving away from that high, right? That's clearly bearish, right? And when we look at that particular candle, just the formation, why did the high come in first? Like, how did the high come in first? You can see this. That's not something you want to fight. You don't want to go against that momentum. And when we look at a 5 minutes, we're moving in one particular direction, and it's a measured environment. And so we can count the steps, and it's a repeatable event, right? It's the same steps over and over and over. We just don't know how they're going to be delivered, right? Right here. See, same boxes, we just don't know how the content will be delivered. Right? So we don't want to fight the overwhelming bias. Prior to the morning news event, the candle was bullish, right? It was a green candlestick. It was a higher high and a higher low. And then as soon as the news came out, that bias went out the window. And that's when I came in, right? I came in after the news. And so when I'm looking at my daily candle, it's 18 hours old. And at 18 hours of age, that candle was looking bearish. Right? I position myself at the same time of day for that specific purpose, right? Let's see what happens next. Any kind of a push back up, you want to take that as an entry for a sell. Higher for longer is what the news basically tells us. And so we have to assume that's going to be the train of thought for, a week or so until the next news tells us otherwise. Yeah, so much fun. Yesterday, what we did yesterday worked out really well. What we're doing right now is in line with what the plan we had all week, right? Our plan for the week was to find our way to 1.1, which we almost did with the news. Oh, we just closed another trade. And then from that red line, we wanted to be sellers, right? So those of you that traded in the European session, that was your chance to be short. And me showing up at my regular time, this is my chance to be short. Right? We don't want to fight the tide. And so any kind of a push back up, even if it's a measured move, slightly bigger than standard, that's okay. We'll take a couple losses on the extremes. Right? But within those extremes, we're willing to pile in the wins like what we're doing here. Right? So it's overwhelming the losses. Right? Any kind of a push back up into what you perceive to be support slash resistance, it's a it's a trade. Right? This is just a measuring cup. It just lets me see what the market is capable of doing. Right? Without push or pull, without outside involvement by itself, it's moving 9 pips. Right? And it may be moving 9 pips back and forth. And that would be normal. Right? Just like it was doing over here. Few more wins. Let's see if we can rinse and repeat. All right, push back up, sell more. Come on. I'll sell anyways. And slow and steady, grind. If we check the daily range, which we typically would have done already by now, measure this. Today specifically is 67 so far. The average is 70. We've basically completed an average day of work, right? And because today was such a big news day, maybe we extend the day. Maybe we do make it a little bit bigger than average, right? So we'll see in the next few minutes. These lines here are just what my mind's eye perceive to be a channel, right? So it's just connecting wicks and connecting the wicks, and I can see a definite range here. And so I'm just looking to see if we can break the range, right? You doing so on an hourly chart, the bias becomes clear. And then doing so on a 5-minute chart, you now have action points, levels where you must ask yourself, do I want to add to my winners? Do I want to close a loser? What do I want to do here? All right, because it's an opportunity to do something. There we are. All right, I want to sell up here. Boom. We are making a half a box. See how we're seem to be unable to get to the bottom of the box here? Right? There's a chance this might be trying to go up. Right? We have to see if we can get to the bottom of the box. I'm looking at the time of day, and I am expecting that pullback. Right? And that pullback that I tend to play with is usually contained to 4 boxes. Right? So as I'm expecting a pullback up, a bear pullback of 4 boxes, maybe it starts right here. Right? So I want to sell, 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 sell. Ultimately, I'm selling because we're trying to make lower highs. We're trying to make lower lows. Right? And I want to see the market over time resume its downtrend. Right? So I'm trying to sell in here, in here, in here, or in here. Right? I just don't know if this is the bottom or if we're coming back. And so I'm preparing for both. Right? I'm a bearish trader and I'm preparing for bullish pullback, or sorry, a bearish trend, but a pullback within it. Right? So I want to sell these opportunities. Right? Stuff like this right here. I only have 4 clicks per box, right? So I have to be logical with my clicks. I can delete this. Right? So I'm assuming this is a low for now. This is a low, and we're just pulling back the same way we did here. Right? So if that here on our left on the 5-minute chart, if this was an average move, what if we're about to make another average move? Right? Another 4 boxes. That's all I'm assuming. All right, here we are. Good place to sell. And the reason why I'm selling is because this right here could be the end of that pullback, just like this little move here. And maybe it's going back down, right? We don't know. And so I'm spreading my risk. Many, many, many small trades over many, many boxes if I have to, right? So all of this adds up to the same amount of risk over and over and over and over, right? It's just spread. Instead of putting it all at once, I choose where and when, and I do so more or less evenly. And because the way the mathematics work out, I'm allowed 4.5 clicks. And so sometimes I'll put 4 and sometimes I'll put 5, right? But I try to round down if I can. I don't like rounding up with my risk. Right? So here I have 3 clicks in this box number 1. I'm allowed 1/4. I'm allowed another, right there. Boom. And so now I took 4 clicks in this lower box, and the white line is the average of those 4 clicks. Now that we're going into this second box, that opens me up to 4 more clicks. And there's a good spot for it. Boom, that's 1. If it keeps going up, I'll spread and spend more of that same money, right there, 2. So now I have 2 of the 4, right? 6 of the 8. There's 3. And that's probably where I'll click my 4th one, right around there. There's 4. And so now I'm just waiting to see if any of these will recycle. Right? By recycling, I mean close with the target. If it goes beyond, I breach the break-even line and I make money on all my trades. Right? This is a measured space, and I'm using a unit of measure, which is a standard. And it's, by definition, the word standard is what I'm exploiting. Right? And doing so at the right time of day grants me access to bars that are big enough to pay me the 3 pips, 3 pips, 3 pips that I'm looking for. Right? So we want to be sellers in a bearish pullback. Right? There's that sell. We just closed the trade, so we're going to recycle that trade. Boom, right there. Right? If we can get it to the top of the box, I'll put a 5th trade there. Right? I have 4, sometimes I have 5. There's that 5th. If we get into box number 3, that opens me up to the next 4 clicks. And then ultimately I have box number 4 before I encounter my stop losses from box number 1. Right? So it's graduated and it's spreading that same amount of money through the same size box over and over and over. I just don't know where I need to spread it. I need to see it in order to do it. Right? And as it's moving about, it's closing some of the trades by itself. I'm the risk manager, and therefore I'm managing the trades that are not closing, right? So I'm managing that white line. The white line is break even, right? It's the average of everything that you see here, right? So if we take a bigger look, market fell down 5 or 6 boxes, went back up 4 boxes, came back down 4 boxes. We're expecting it to go within 2 to 3 boxes, and I'm sellers, right? And then I'm a seller because I see something like this as a resumption. All right, so let's just see what happens next. It's the measurement that keeps me from running wild. My mind doesn't go, oh my God, what's happening? If I can keep a measuring tape around, if I can see what's happening, and then that's a point of reference. It keeps me sane, and it keeps me from, going rogue with 1 or 2 trades. Right? So here we are recycling a trade. We just closed one. Right? So if it pushes back up, we can take that same risk. We're not adding to our risk. We're just reusing the risk that's already paid us. Right? And I'm doing so with time in mind. Right? I'm not trying to do this for 18 hours. I want to do this with a time limit. Right? I want to leave the casino on schedule if I can. Right? If you stay in the casino always wins. Right? So make your 20, 30, 50 pips or 50 trades or whatever and walk away. Be done. Switch to a demo account or go to the beach. Right? So what we're trying to do is figure out what works for us, our own little groove, and then wash, rinse, repeat over and over and over. And then with time of day in mind, you start to operate like a business and you stop on time. And that forces you to keep your monies. Right? Nobody knows what will happen next. I just know that I can measure it. And then with that measurement, I have an idea of what's left, what is possible. I'm weighing probabilities because I measured something. So there's that opportunity we're looking for. If you want to take that fifth trade that that I'm allowed, I'll take it right there. If we break into this box, that opens me up to an extra 4 clicks, right? And I'm still looking for that move. I'm still looking for a short move, right? A lower outcome. Oh, there we go. We just made a little bit of money. Right? Average bars are 4 pips. My target is 3. So all we're doing is trading volatility and we're measuring it through the use of a standard deviation. And if anything is not standard, we react accordingly. Right? So it's setting us at ease. There's a layer of consistency built into this. Right? How you behave with the box is now that last variable. There we go. This is beautiful. So those of you that haven't visited the YouTube channel yet, go, subscribe, like the videos, watch them all. There's about 40 hours worth of content. And every day I upload. Today's video will be there sometime this afternoon. And then you can go and review what happened, how it happened. You can just listen to the voice or just watch the video with no voice. It's up to you. But the content is there for archive. So go and use it. They are, tell your friends too. This is what we're looking for, right? A move back down. We built the position when we were going up into the boxes, and now we're getting paid for having postponed gratification. When a plan works. Right? So if it pushes back up, you get to reuse that money that margin that just got freed up. Right? You get to put it back to work. Right? So any green candle, put that money back to work. If it goes into box number 3, that box has its own money, right? So there's no scarcity until box number 5, which at that point you have to start closing trades. All right, so there is a push back up. I'll take a trade. Green candle, I'll take 2 trades. All right, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 winners so far. Let's see what else we can do here in the next 30 minutes. I'll take another trade up there if I can. Right there. Boom, boom. Okay, so I'm spreading my risk. I'm trying to be evenly spaced out, and I'm trying to not rush the process, right? I have to be on a green candle, preferably at some kind of level that's predetermined, like what we have here, and then at these action points, you have a pretty good idea of what you're up against, right? It's either bouncing off of this or it's going up to the next one. And you ask yourself that question over and over and over and over, right? It's bouncing or it's going up to the next one. And then you and I assume the bounce is dominant, right? We play bounces no matter what. And we fix the breakouts like this right here, right now, right? We take a trade there, right? I'm trading on the pullback and I'm assuming I'm in box number 3. So I'm spending the money that belongs in box number 3 on that wick right there. Right? So I put 1 click in box number 3. Let's see how I spend the other clicks. There's one, right? Right here. That's 1 click. Sell that. If you have more, sell it here. Right? All you're looking for is an opportunity to move that white dotted line. See how it just bounced up there? We're selling this. Click number 4. Okay, so now I have box number 5. If we go into box number 5, I'm also threatened by the stop loss from that very, very first trade that I took down here. Right, one of these trades here has a stop loss that's 36 pips away. And so that's what I have right here. That's the trade right here. That very first trade, that's the first one that will get tapped out. And then the second trade is the second one if we go beyond box number 4. Right? So I'm layered in and I'm waiting for this. Let's see what happens in the next 25 minutes. Another push higher might be in line. Just now, as we speak, we've made a slightly higher high across here. From this level to this level, there's just enough to take out a bunch of stops. Right? So any kind of a push higher, you want to sell it. And we're just recycling the money that we just closed, the margin we just closed. All right. Love it. All right, push back up. I want to sell. Boom, something like that. Right? We know where the stop losses are, right? Our ejection seats. And so how the market behaves in this area will be very, very telling, right? We also know that it's a normal environment, 4 boxes. If it goes beyond that 4th box, something is not normal, right? It's bigger than expected. So you react accordingly. Maybe it requires us closing 2 trades and booking 2 losses, right? We'll have to wait and see. And so we've just recycled a couple of trades. Let's see if we can do that some more. Do it over and over and over. On the calendar, what do we have on the calendar? I think there's other news in this session. Yeah, so 8:30 natural gas bill auctions. Ooh, these should be fine. 9:30. Yeah. Okay, so we'll have to try and be finished trading, you know, as soon as we can. We don't want to be standing in front of bill auctions. The last few ones have moved the market. So I don't want to be, if I can, I don't want to feel threatened. Right? So here's a chance to recycle some trades. One, two, three. And all I'm trying to do is move that average price closer to the current price. Right? So now it just needs a smaller move to get me out of trouble. Right? So here we are testing resistance, previous resistance, the previous high. That would be a sell spot if you want. Sell right there. Okay, so we're trying to not fight this, right? This is clearly a bearish market, and we're just trying to assume this is a normal pullback in a bearish market, and as such, it should resume as a normal move in a downward direction. And so we're just taking advantage of that positioning. And looking left, look left, we're at resistance in box number 3. Boom, I sell. And so where we are from the current price to where my exit is 11 pips. All right, I'm literally 1 box away. And so here we are just closing a winner at the top of box number 3. Right? When most people are feeling threatened because the stop loss is so close, we're still executing our system. We're still going through the motion, just like an airplane pilot is following a checklist, even though he's approaching a crash, right? So we have rules to follow, even under the worst circumstances. And ideally, those rules are there to avoid that worst circumstance, right? It's designed to work over time, right? The law of large numbers. Just want to recycle my trades if I can. Yeah. Consider yourself an airplane pilot and you're following a checklist in order to open the trades. You're following a checklist in order to manage the trades that don't close. All right. So there's a system at both ends. The trades in the middle are closed by themselves. And the trades you don't deal with, it's because they're closed at profit. And so you don't have a runaway mind if you have a job to do all the time. If you're constantly, looking for your next task. It's when I have no task, my brain runs away and all of a sudden I see stop losses and oh my goodness, it's the end of my trading career. When in reality, it's just the end of 2 trades. Right? So it's the brain sometimes is your worst enemy. Right? So contain to the environment, standard environment, standard number of boxes, standard number of clicks, standard targets, standard stop loss, standard behavior. I think the word standard sticks out. Also, the fact that we don't know the future, the whole premise of this is to give you the freedom to be wrong, like I am, from box one into box two, and yet into box three. I've been wrong for 3 standard deviations, but I have not given up on the overall direction or the bias or what I'm attempting to do. And so at some point, I know I'll be wrong. And that's usually on the outside of box number 4, right? And in this particular case, the outside of box number 4 is threatened by the first 2 trades before I go further, right? So if the market does end up into box number 5, I've already lost 2 trades and I'm losing 4 more, maybe 5 more, right? But the market has to go there. And so ideally, what I'm playing are the facts. And if we happen to go there, the facts are that we're going there. Until we go there, the facts are we're not. Right? So let's see. It's all about the probability, the time of day, the positioning, more or less, based on average moves, right? And then with that comes a whole ton of years of intuition, practice. If all these rules could just be programmed and let the robot do it, I'd be a bazillionaire by now because the rules are pretty simple, right? But it's the years of intuition and poor judgment that make me a better trader today than I was yesterday, right? So that little piece, that intuition is what is not programmable. And that's the piece that robots, EAs, will have a problem duplicating, right? There has to be an operator for the robot. See how long we can stay in box number 3, or even if we go into box number 4, right? And then how we behave with box number 4 is the same, right? I'm spending 4 clicks, and if I must, I'll be forced to take a couple losses. The strategy allows me this freedom. Those of you that have been, watching the videos or attending the live sessions in the morning, we've had a pretty good week. This was yesterday right here. This was the day before. The day before that, I think I may have traded in a different account. Those were longs. Yeah, I was in the other account. And so in this particular account, what have we done? About $300 of profit net. We traded it this week. About 2,600 pips for that $300. Awesome. December 14th. Fantastic. Okay, so here we are threatening the top of the box. I have a click to spend, so I'll click it right there. And now if we go into box number 4, I'll be spending the box money that belongs there, right? Money that belongs into box number 4. So I took one already. This one here. I will remove this. We all know I'm looking to go long. I'm looking to go short. I'm just looking to spend the money where it's appropriate. What does that ladder look like? Yeah. See, we've gone down the ladder, gone back up the ladder. We're holding resistance in this area here. Let's see if we can finish the day lower. So we're just trading probabilities. Sometimes the probabilities work. Sometimes the probabilities are borderline. Sometimes they're totally off. And according, to the strategy, by just not changing the rules, but only repeating the rules, it's the sample size that delivers the results you're looking for, right? So you just have to do the thousands of trades. You can't rely on a handful of trades to pay your bills. In theory, you need to have, as many trades as possible in order to be right as many times as possible. You're here to be right. And that's what speculating is. Right? So I'm not spending the money that belongs in box number 4 unless I am in box number 4. Right? That's a critical factor. Someone's asking how many losses can I take before all day's profits is gone. I don't really care, and that's not really the point of the exercise, right? The losses are there to stop the bleeding. My job is to create as many wins as possible, right? So prior to that first loss, I don't know how many wins I've had, right? It's opportunity based. And so far, I've had nothing but wins and no losses. If I have one loss, that very first loss, that's 36 pips, it's likely going to take away, at least maybe half of my winners, right? Each one is 3 pips, right? And I've got at least 18 of them, right? So it all depends. It depends on the work you've done before the loss, right? This is the whole premise of the strategy. We're overwhelming the losses with wins because they're far and few in between, right? The losses are far and few in between. This is the dilemma, right? It's clearly risk to reward ratio challenged. Yeah. Yeah, even if I take 10 losses in a row, I'll still get back on the horse and look for the next 3 pips. Right? That's the way the brain has to work. That's the way the system has to work. Right? The probabilities tell us we can have series of losses and still it's a viable system. And so you must survive those series, not throw in the towel, not say, oh, this is broken. And so this is why looking at your own statistics is so, so, so critical, right? When we go down here and we look, you want to see how many losses in a row, if you can't figure out, no, how many losses in a row do you typically generate? And then that will give you an idea that, hey, if I lose one, I sometimes will lose, 11 more. And so we don't, my statistics are different from yours. And so you have to figure out what you are typically capable of and strategize accordingly. If your statistics say that, hey, on average, you lose 6 trades in a row, envision yourself. As soon as you have one, yet there's 5 more coming. And so you don't size up, you size down, right? And so what I do is I spread the same risk everywhere. And by not changing that risk, I'm just adapting to the size of the move, right? I'm not adapting my size. I'm adapting the number of clicks. Right? I'm doing everything I can to not go near that stop loss, right? But I will not touch that stop loss. That is an ejection seat that I committed 2 years ago. I've ejected a lot of times. I've crashed many airplanes, right? But the aim of the game is to bring back the airplane, right? Do not eject if you can, right? Aim for break even. If the market just all of a sudden something happens right here, right now, and it just shoots up and closes all of my stop losses because I filled up 2 boxes, I lose 2%. If I had all 4 boxes up and the market went through all 4 boxes worth of stop losses, I would lose 4%, right? But you can see here, it came close. It never closed anything, right? And so it's just using drawdown. It's space that I'm allowed to exploit because it's a standard amount of space. I started exploiting it a little bit too early. And so it got me a little bit threatened, but nothing, that I can't deal with. Right. So the environment is almost predefined. It's in our mind. I expected a V kind of move because there was a V kind of move here and a V kind of move here and a V kind of move there. And so it's how big of a move, right? So we start looking at measures, and this is an average move, right? Contained to 36 or less. And we're making money in that environment, right? So any move back up, you want to sell, right? Any kind of push back up, you want to sell that and add to your existing winners, right? Like that right now. Boom, 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 right? And you don't go click, 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 click. You have to go slow. You have to be methodical. You have to spend money that you're allowed to spend. Yeah. The number of losses, it's up to the conditions, right? You are putting 4 clicks per box or more or less, whatever. And so each click has its own stop loss. And because they're all staggered, you don't lose everything at once. There you go. Well done, Francisco. Out at break even with some pips extra, he says. Done for the day. See you tomorrow. Yes, absolutely. See you tomorrow. Well, job well done. Keep up the hard work. There we are. Right? We want to be recycling some of these trades. The money that is freed up as a trade closes, you get to reopen it, right? And then at some point, you look at the clock, you say, okay, time's up, and you stop recycling, right? You'll walk away for the day. You're done. You're finished. And that money is then yours to keep. I found if I stuck around, especially past lunchtime New York, a lot of my morning wins disappear. Right? I end up giving them back, or I'll lose them overnight, or something stupid. And so, you know, do the best you can within a couple of hours, and then force yourself, exploit discipline to walk away. All right. Consider this a casino, and the casino always wins. All right. So if we can recycle some more trades. Right. We may or may not make a lower low. We'll see. Right. We'll see. But the goal is that we are, right? We're not fighting the trend. We're hoping that the tide lifts all boats, and we're just one of them. Right. So what did we do? We started the day expecting a bearish outcome. We showed up on schedule. We built a bearish position in a pullback. And minutes later, our position started to pay, right? So we postponed gratification, and it was the right thing to do. And we can repeat that process here, right? We can wash, rinse, repeat right here, right now. And you're not spending money you don't have. You're not spending risk that you can't afford. You're just recycling trades that have already closed and have already made you money. All right. So if it goes and makes a higher high, slightly higher high, that's okay. Right? You have money to spend in this area. I'll keep the video running until I close these trades. I'll take a trade right there too. I want to see the bottom of the bottom box, and then I'll be done trading for the day. And then the one finished. Good job, Giannis. Awesome. Done with extra profits. Fantastic. That's the goal. You guys should go post your successes in the testimonial forum. There you go. And also post your failures, right? We can't be afraid of those. It is a testimonial. Right. Recycling trades in the right area, in the right direction, under the right circumstance. When a plan just works. Right. A few more minutes. And every one of us in the group here will be flat in the money. Our break even is a few pips away, 4 pips away. And once we cross break even, you're free to go. Not knowing the future is awesome, especially when you can deal with the alternatives. Anything can happen, and I'll be okay. It's the best mindset I've ever had. Right? So we don't want to go nuts with the clicks. We just want to be able to be accountable for the trades that we do take. Right? There has to be an actual real reason there, and you have to be able to afford it. And so by spreading things evenly, we're not martingaling, right? We're not doubling risk anywhere. We're not adding to losers. We're building a position. That position pays in time. And in time, it pays in pieces. It's not one big fat paycheck. Right, so a few more minutes. Uh, we'll be able to recycle some more trades and be done for today, good and proper. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Wow. Yeah, I think we've overcooked the turkey. Right. We put in a lot more trades in our 1 hour than we normally would, which is awesome. That's okay. Opportunity driven. I still have another hour according to the strategy that I'm allowed to exploit to make money. And I am looking to be finished by lunchtime New York. So, things are falling into place. It's the unknown that has yet to show itself. And then if it's in our if it's in line with our probability, we end up finishing the day early. If it goes against our initial probabilities, it still gives us opportunities. It's just extending uh, our exit, right? It's going to take us a little longer to get out. Speaking of, a couple days ago, it took me 16 hours to close some trades. There you go. Hey, Logan just made back some of his losses. That's perfect. Good. Yeah, this is it. If you fall off the horse, don't be afraid of the horse. Just get back on. And by getting back on the horse, you're not looking to race. You're looking to just, make your 3 pips, 3 pips, 3 pips. You know, it's the consistency that's more important. The losses will happen. They're unavoidable. You can manage them. Right? So this is a good situation to be in. You know, I don't mind being in drawdown with the expectancy that the probability is valid and working out, right? These are just standard events. We just don't know what the catalyst might be for this next leg. We are expecting it. There's a probability of it. There's a really good chance. We don't know what will the cause be. Like, who's going to sell that initiates that drop? Who's going to buy it that stops it from dropping? You know, so this is the problem, right? This is not random. People are doing deals at this very moment that are moving the price. Right? I want to sell the top of the box if I can, as close to the top as I can. Something like that. I just moved my break even into the second box. So I'm trying to work off it. this, something like this. You have this one over here. So in this environment right here, this is where the anxiety goes up, right? Because we are expecting something to happen, but it's giving us something else. But it's also doing it in a unit of, in an environment that's measured. And so you have this expectancy that it should remain in the box. And if it breaks the box, then it should remain in this new box, unless it comes back, right? So it's this thing, it's one or the other. It can't be both. And depending on what your bias is, one versus the other is money or it's nothing. You know, it's a trade or it's nothing. And so you have to know what, ideally, what your bias is, and then you build a position with that outcome in mind. And that's what we're doing here, right? We're still building a short position, expecting a shorter, a lower outcome. Right? Something like this. This is what we've been working in line for pretty much all morning. Okay. See what comes next in the next few minutes. As long as I'm out of these trades, today proper, I'll be really excited. I'll be happy. I'll have completed the goal. I don't have far to go. I just need to go here. 2 boxes. The market can move 2 boxes in the blink of an eye. Right. The dilemma is our expectations sometimes are threatened, and that threat is an instantaneous fight or flight. And then depending on your skill set and your experience level, you deal with that flood of emotion very differently, right? The newer trader will panic in light of drawdown, whereas I'm exploiting drawdown. That gets my sandbox, right? I'm at the opposite end of the spectrum. Likewise, when things are approaching my stop loss, I continue to follow my checklist, or I continue to try and land the airplane instead of you know blowing up the airplane. And so it's the mindset, right? The strategy is already laid out. The rules are already there. It's this piece of human nature that has to take part. You have to be a piece of the process. You are the process. And so it's this exploitation, right? It comes down to following the rules as best as you can under the circumstance without panicking. All right. And so breathe and meditate if you must. Take time off. If you take a bad loss, take a few days off. That's okay. It's not about recuperating. It's not about making the money back. It's about getting better with your next trade. And then by managing the losses, by just getting better with every trade, you're making fewer mistakes and you're making your money back. The psychology of loss is the biggest thing. Trust me, I've been there. Yeah, the issue is we want it all back. And the market is more than happy to give it back if you know how to get it. Right? It's happy to give 3 pips, 3 pips, 3 pips all day long. Come on. I'd like to be done in 20 minutes or so. Be nice to see somewhere around here by the bottom of the hour. Anything can happen, and one day anything will. And so until then, I'm preparing an alternative. Right? I have plan A, I have plan B, and as soon as I have plan B, I usually have plan C somewhere in the background. Right? So push comes to shove, the stop loss stops the bleeding, but it doesn't stop me from trading. It doesn't stop me from being positive, looking forward and getting back on the horse. So do we want to sell here and recycle these couple of trades we just closed? I will. 1 and 2. And so I'm trying to keep my average price in this box. Right? So my average price is well within reach. It's within one standard deviation. Right? The white line is 6 pips away. Let's repeat that. Let's move it up a bit. Boom, one line. So now we're right there. And so the succession to this, the outcome of all of this is that we would expect sometime in the future a lower low, right? Because we are making lower highs and lower lows. So the expectation is that should continue unless some catalyst comes along and changes everything. And so we already looked at the calendar. We know there's bond auctions on the ticket, so on the docket. So we have to be aware of that, considering who is selling, right? The US is holding the auction, so the euro is likely going to go down a little bit more, right? So it makes sense. Everything's falling into place, and the measures are not lying to us. The measures are keeping us from having a brain go wild. It's allowing you to keep consistent uh, uh, what's the word I'm looking for? A consistent train of thought. Like I don't want to be flip flopping. I don't want to be scared to be bearish all day. No, I don't want to be feeling threatened. Oh, I must flip flop. No, 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 no. I I have a mindset. I have a process. The two combined tell me to do one thing, and I do that one thing until the proof tells me otherwise. Right, right here. And so ideally, we don't want to mess around until the proof tells you to. And that's where the problem is, right? That's where the box comes in handy, right? It tells you the proof, it shows it to you clear as day, right? You're in the box or you're out of the box. And there's no fighting that. There's no denying it. There's no, oh, I can't believe it. No, 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 no. It's believable. And ideally, by not denying the facts, you're following them and you're exploiting them. And this is what I kind of hope to teach you guys. Right. So I'm still looking to do this in the next little while and maybe make a lower low on the day. So let's see, we have 15 more minutes or so before the bottom of the hour. And then in 45 minutes, we should see the banks in Europe closing. And with that, we normally would see volatility, right? So it's a chain of events. None of those things are random. They all happen on schedule. And we kind of don't look for those things and we fall into their trap. When you understand that event is coming, you know something is happening with or without you. And it may or may not be in your favor, but awareness is the key. Right? Loving this. Beautiful day today. Yeah. As I speak, it's minus 29 Celsius outside. Feels like minus 39 Celsius in the Rocky Mountains. Love it. Ba-da-da. Come on. We want to see some bearishness or opportunity to sell. Boom, boom. Right, so I'm just trying to keep it to the same number of clicks, and I'm just recycling the opportunities that are granted. If it pushes up, it opens me up to more money and more clicks, all within context. So with time, we'll see what happens next. The conditions, the news that came out earlier was the catalyst, right? It has the intent behind it. We waited to see the news. The market waited to see the news the whole week. And then as we approach the news, we approach 1.1. When the news came out, we fell off of 1.1. And that was the plan literally all week. And so, well done, folks. Those of you that followed along this week, you've been selling off of 1.1 or buying into 1.1 until selling it off. So good job. Right? That's exactly what we did right here. And today we're making our money in the opposite direction. Right? All of this. And we're good. There's our ladder. We're contained to a couple of rungs. Right? We have an idea of what's trying to happen here. Right? They can't keep it hidden for long. Stuff like this. Right? Depending on how you like to draw your lines, you could have speed lines, you could have trend lines, you can have, channels. Ideally, it's just a point of reference. It's just telling you a story. It's telling you what to do if you get there. And if you follow, your own personal rules, don't break them, commit to stuff, you'll be better off. Mhm. Ba-da-da. We're back in box number 3. We're going to sell the trades that belong in box number 3. So we have opportunities to sell right around here, right around here, right around here. And so on and so forth. If we get up to here, we'll do the same thing again. The close of the day today, I think, will be critical to our expectations for the next week or so. Right. In the end, the bigger picture, I do think we are trying to go much lower before trying to go back up. Right. So I am looking for something, 780, 760, 750. Right. But that's not in one day. Right? This could take a long time. And so we'll see. Each day we show up on time, we do our couple of pips, and we walk away. Okay. Anyways, I'm gonna let you guys go. You know the plan, right? We want to remain sellers, and we do expect to close our shorts in the near future, right? We've postponed gratification in order to make this money here, right? If the market pushes up into box number 4, 4 from the low, right? 1, 2, 3, 4. May be forced into closing a couple, right? But the rest will still be around, hopefully to make my money back. Right. So we'll see what happens. I'm gonna let you guys go and wish you good luck for the day, and I'll see you tomorrow. Same time, same link, same everything. Okay. Enjoy yourself. Trade safe. Bye-bye.